JB here. Hope everyone's doing outstanding. Tuesday, November 11th, 9:14 a.m. On this fine morning. First off, thank you all the veterans out there, those who sacrificed. I appreciate you. So enjoy your day. But really quick talk about the market. Some names I'm looking at go from their S&P futures slightly in the red, down about a 0.25% here on the heels of yesterday's epic rally. Well, up 1.5%. On the government shutdown, right? What a crazy catalyst. I mean, markets tanked once the government shutdown started. And then now we've recouped the games. Joking aside, if you take a look at the time frame since the start of the government shutdown, I think the markets are up 0.75%. So actually coming into yesterday, markets were down since the government shutdown. So um, to me, I don't know so much that it's about the government shutdown, but it's good to get a little bit of uncertainty out of the markets, right? The longer the government shutdown goes on, the higher the risk of some serious damage to the U.S. economy. We already saw the escalation in the flight situation, the air traffic control situation that kind of started out as not too big a deal. All of a sudden, it just exploded. So, and especially we have the Thanksgiving holiday coming up. So, good to see that get resolved. And what's the next big possible headwind for markets? We'll see, right? I mean, you still have all the rumblings of the AI bubble, but now that the government shutdown is, I mean, it's not 100% over, but it should be over once the vote goes through Thursday, maybe later on Wednesday. Then it's about when does the data that's been put on hold, when does that start coming out? The jobs report. I mean, we already got CPI data, but PPI data, PCE data, all those fun little data points that has kind of left a little opportunity for markets to kind of say, "How are we still struggling in regards to the jobs market? Is inflation really soaring?" So that'll be important. So there's no clear estimate of when the new data will start to come out, but I think there were. I'm trying to see if I found. All right. So anyway, that's overall markets. The thing is, and I put on the watch list this morning, it's almost like we could be up 1% today or down 1% today, and I don't think I would be surprised by either scenario, just because there's not. It's like if we sold off, it'll be because of the AI bubble. If we rally, it'll just be about continued enthusiasm that the government shutdown is over. Right? It's just there's not much in the way of earnings. This morning at SE Global reported, and I think it's lower. You have Nebius Group, right? Trying to think what it used to be called. But anyway, so not much in the way of earnings. So it's kind of like, okay, what are we going to look at? So I put on the watch list the yields. Obviously, the 10-year still over 4%. We'll love to see that tick down a little bit. And then the market breadth and the amount of stocks trading over their 50-day moving average is trending in the right direction. So I posted this chart this morning. Nice follow. I don't know if I posted this person in the chat room before, but they have some great data points every morning comes out, whether it be any market data, but this is the amount of stock buyback authorizations, a year-over-year change from October. The thing is, right, and you can look at this and say, wow, that's bullish, $1.2 trillion in buybacks, up from $1 trillion last time this year. But the thing is that the dollar amount isn't going to equate to as much in regards to stock, right? Because the higher stock prices go, the amount of dollars to buy that stock, you need more dollars to buy the stock. So it's actually not taking as many shares out of the system. So you would think, I don't know if exactly year over year basis, S&P is probably up more than 15%. But if not, then it's flat, right? But anyway, I always like to see the buybacks. Nobody likes to talk too much about the buybacks too much in regards to taking the supply out of the market, right? I mean, I'm trying to remember. Well, I don't have too much of a rant, but back in 2014, I wrote this big article. I think the SPY was down to like the 200s, and one of the things that I think was the big bull case on the market is there's less stocks out there, whether they were delisted, mergers, M&A, and then the IPOs weren't backfilling the market. So because of that, the amount of tradable stocks and tradable stock out there was less, and then the buybacks take more of the shares out. So there's less supply of stock out there, and you still have the same amount of money coming into the market. So just as a function of that, markets head higher, right? So all right, rants for other days. So I put on the SPY today, just watching 679. That's a big spot. Hopefully we can hold that here today. We're at 680 right now. On the flip side, on the upside, 685. That was a big spot. I talked about last week. That was some resistance. And then on the way down, I'm probably going to be keeping things relatively small today, pending any crazy opportunities that scream at me. But if we do find weakness, 673 doesn't hold on to SPY, I'll probably be aggressive on the put side again. I like to be playing put lottos and hedges more towards the end of the week when the premiums are less expensive. So hopefully that it doesn't come to that. The SPY doesn't find sellers, but can't rule that out, especially in the current environment. All right, so that's overall markets. Just quick on individual names and Solar Edge. I mean, the gift that keeps giving since its earnings last week. Monster move yesterday, was up over 20%. No news, no catalyst, just continuation from last week's rally. It's got a huge short interest, has the backdrop of the entire AI energy boom that's going on. And here's some names that probably haven't rallied as much as maybe they should have. So I don't know if some of it's a catch-up play, some of it's a short interest, shorts covering play. Some of it was their earnings and turnaround play. But, it was a 300 plus stock. Might have been even higher than that back COVID days. Not saying it gets back to 300 bucks, but the more I start looking at it, the more I think maybe there's some continued FOMO here. So I talked about the 42 handle being a key spot yesterday. Once it broke over that, I went looking for more strikes. I locked some of the 45s in for over 100%. Then I locked the last of those because those are weeklies. I had gotten the 50s on Friday. I closed some of those out for over 100% and 300% and some more for 500%. And then I started looking for some FOMOs, right? So I got to November 28th. I locked some of those out for 100% cover cost there. And then I went to the Januaries. And by the afternoon, I was able to close some of those out for 100%. So now I'm riding completely free, plenty of profits. I'll just continue to hold those. The thing is, Solar Edge is volatile. So it could be back into the low 40s today. It could be over 50 today. I'm hoping it's the latter, obviously, but open to both sides here. The fact that I'm riding free gives me the opportunity to be a little more patient in regards to holding positions. So pending any crazy swoon today, I'll probably wait. 42 will be a spot where maybe I'll start to salvage some of the positions if that happens. If 42 holds, I think it's all systems go for a continuation into the end of the week. And, I got some strikes there. Call me crazy, right? If this catches fire, you can't rule out that maybe go 60, 70, 80 and get some fun with 100 bucks. That's like, 1% probability, but that 1% probability will make calls thousands of percent gain. So I don't want to miss out on that, considering I think that's a possibility. So I'll continue to hold positions for that. So that's Solar Edge. And you take a look at a long-term chart again. This is not, saying that this is where things go, but certainly interesting on that 42 break. All right, so that's Solar Edge. Some other trades I did yesterday. SERV. I still have some later dated freebie strikes on SERV I've been holding since its meltdown. Want to get some calls into its earnings Wednesday after the close. Got some December strikes. The plan here is to lock some in to cover costs if I get a chance. But if I don't, I'm probably going to hold regardless. I might look for some other strikes here too on a rally. The funny thing is, every time it does a gap at the open and runs, it seems to give back the gains. Today we're in the red, so I won't be surprised to see a reversal into the green. So if it shows some strength and starts heading towards 11, don't be surprised if I add some more strikes. The problem here with earnings on SERV is that it's not really like an earnings story yet, right? Because it's still doing like $1 million in revenues on a quarterly basis. So it's more about how is the deployment of their robots going. They announced the thousandth robot back in October. They reaffirmed their guidance for 2,000 robots by the end of the year. What does that look like? I think they're deploying up to 400 robots a month now. So that plus their cash burn, what are they using that $100 million raise they got? So those are some of the things I'm looking at. The other thing is, if you remember its last earnings, it had great earnings, great update, and the stock traded from like 11 down to 874 in the after hours session. So that just shows me that the shorts is waiting to like induce sellers. So we'll see how the trading works out. Just a frustrating thing with SERV, it can have a great report, great update, and can still trade in the red. I hope that's not the case. Just off the heels of its Dash partnership too. I think all systems go, but can't rule out that the market's short's going to be able to punish it. I hope that's not the case, but I'm more optimistic. I'll look for more opportunities to play for upside. And it's more lemonade calls yesterday too. Once it started breaking 80 bucks, then it pulled back. Still think this trade's triple digits in the coming weeks and months. I'm probably going to lock the last of my 90 strikes in. They're still up close to 100%. And then I'll just hold the calls I got yesterday. You can make the case that a bull flag is setting up here. So even if it's flat today, that might bode well for more upside in the coming days and weeks. That's lemonade. Other names I'm watching here. We got 7 minutes to open, so I'm going to get off quick. Align, right? Great earnings last week, all the way up to 150. Gave back the gains, traded kind of flat by the end of the week, and then here it is. Nice little rally yesterday, up about over 2%. But it's a $10 billion company, $1 billion in cash on hand, no debt. the issue with Align, and back when it was 5, 6, $700, I forget how high it was, it had decent double-digit growth. That growth has slowed down into the single digits and lower. Some of that you have to attribute maybe to the higher rate environment, but I think as rates start to come down, it's got its, just I think it's got its growth story. Well, I would say growth story, but I think even single to low to mid high digit growth, I think it trades substantially higher in the coming months. So it's always a name that I look at more positively skewed, right? So I always look for opportunity on the call side. You also have an insider buy a couple months ago. The CEO bought $1 million worth of shares somewhere in there at right around these, or actually it might be in the one mid 120s. Anyway, I think there's an opportunity. They have an active stock buyback program. 150s for next week look interesting on a risk reward basis. Don't be surprised I add some there. The only issue is a very slow moving stock, right? So that's aligned. And then SSYS reports earnings Thursday morning, Israeli company, so reports overnight. After playing the calls for some profits at the end of October, it's down like 30%, right? It was 12 and change, 12.50, all the way down to $9. No news, no catalyst. I think there's an opportunity here for upside. And then, like I keep saying, I'm open to both sides of the tape. So if there's market weakness, I'll keep looking at Lam Research, ASML. Yeah, let's have a great day. I'll be back on audio later. Rock and roll.